Hey, gang. Welcome back to Trading the Absurd. Today, we are going to talk about the SpaceX IPO and, absurd valuations, among other things. And before we get too deep into it, I just need to remind everybody that this is educational and entertainment purposes only. We are not providing specific financial, investing, tax, or any other kind of advice. So let's go, Sterling.
Let's
Um,
do it. Speaking of trading the absurd, this one is, as a value investor, probably the most absurd in the history of mankind. Uh, there's been a lot of talk about how this sets a new record for everything. But if I go back in time and I think about my tech days, and I look at the dot-com era, right? If you look at Cisco, which was probably the single biggest IPO valuation that the world had ever seen at that point during that dot-com era, and Cisco is a unique company because they were able to go buy other companies with great technology, and they had an entire division that was just dedicated to bringing those companies in and onboarding them and Ciscoizing them, making them part of Cisco, right? What they were
right,
really doing was stealing other people's technology, using their stock as currency. But
right.
they traded about 30x price to sales. If
Okay,
I look at if I look at SpaceX, I think it's like 100x price to sales right now. So we're talking about something that's three some odd, x what that IPO was at, and we all know what happened at the end of the dot-com era. So
right.
I think that there's a lot of absurdity in this. I think even the non-value people the technical folks in theory can't really comment because they don't have anything, they don't have any history yet to look at. But you can look at it, and you have, Greg, right, a bunch of other IPOs and what's happened with those. But my general thesis with IPOs is, unless you're the insider who's getting the stock at the IB priced, number, and you're able to sell in that at the end of that first lockup, you're likely going to not do well. The other thing that's interesting is there's apparently, it's supposed to be it's priced at 135 a share. It's supposed to raise 75 billion. And retail investors have already submitted more than $100 billion in orders for shares. So that tells me that, the retail appetite, if I look at the insiders, I mean, I'm going to bet that probably a good portion of that 75 billion is already spoken for between the institutionals and the insiders. So
Yep.
how much is really available. But let's just assume that half of the 75 billion is available for the retail investors who are able to get in on that first day. $100 billion chasing, $37.5 billion of assets tells me that that's 3x, what it's worth. I mean, so I think that, and that's assuming that the IB valuation is at what it's worth. Then we can go talk about some of the other components, right?
Yeah.
And as again, as the value guy, I got a list of problems. What's wrong with
Well,
this IPO? Where you want me to start? So anyway, when we talk about trading the absurd, this one is absolutely probably the most absurd. And people are either going to get really wealthy or they're going to get really destroyed.
yeah, yeah. Oh, I would agree. And I mean, in general, I think I agree with you on IPOs. There tends to be, the insiders and the institutions do well out of the gate, and then the frothiness of the retail side that's constantly dealing with FOMO, the fear of missing out. They bid it way up, and the insiders and the institutions sell into that at a height that it trades off. I mean, and if the company, sometimes the company will do well, and eventually you'll see the stock price increase. However, many, we pulled up charts here for several recent IPOs, and the majority of them, I mean, they pop at the beginning and then they're in a downtrend from there until now. So whether
Well,
they're eventually,
you got some graphics on that, if I
I
remember
do.
correctly, kind of showing what happens there. And it's interesting too. I mean, I think back to the time I've spent dealing with private equity groups and hedge funds. A guy I know in the hedge fund business, I won't call him a friend, but his name is Doug. And I remember one day he looked at me in the middle of a conversation and said, "Well, who has the lowest expectation of return?" the retail investor.
Yeah.
And to him, the retail investor was the ultimate patsy. That was the person that they could unload any piece of crap on
Yeah.
that they wanted to. Uh, I don't think that Elon is looking at the market as a patsy. I don't think that's his personality. But I do think that the IBs that are supporting him and the people that are going to buy into this
Yeah.
absolutely look at it that way. And so, the realities of the core business, I mean, they're growing at 33% a year. I mean, they're growing insanely fast, which is a really good thing, right? In theory, you should be able to grow
Right.
your way out of this. But as I like to say all the time, all revenue is not created equal. And, if the revenue has negative margin associated with it, which in the case of the X component,
Yeah.
it does, XAI, excuse me, that's, the more you sell, the more you lose.
Yeah, of course. Of course. I mean, I like Elon. I think he's brilliant and done some amazing things. I would really love to see him, make, get humanity to Mars. I mean,
I
as a
mean, we're
kid,
talking about a guy who's done stuff that nobody thought was possible,
yeah, yeah. So,
right? I mean, if you
if
had told
anybody,
anybody even 2 years ago that we'd be catching rockets,
yeah, yeah. I mean, he's definitely redefined, what is possible. So my hat is off to him for that. I really hope he succeeds. But out of the gate, yeah, I mean, we may. Okay, I don't know what happened with that, but I am back. As I was saying, we are recording. Hopefully Elon will succeed at this and he'll get our species to Mars, and it would make all of us that grew up as like sci-fi nerds, obsessed with Star Trek, the original series, and then Star Wars and everything that followed on after that. I mean, it just a lot of people on the will be excited if he's actually able to make this happen, and I really hope he does. But does this make sense in the short term as an investment? Probably not, other than the people that get in at the pre-IPO price, as you've said. Let me
well, and will he get there? To me, right, is an entirely different question from will he get there and you as an investor in the company benefit from it. And so,
agreed.
I mean, do
Ag-
I have confidence that he'll get there on the things he's trying to do? Yeah. I mean, the guy's done stuff nobody thought was possible.
yeah.
Catching rockets, returning from space, implanting chips in people's heads,
Hmm.
in Neuralink, and those are two components of this IPO, right? Those are both part of SpaceX, as I suspect to some extent Tesla might be too. And I do wonder how much of a Tesla rescue might be built into this. X is built into this, and that's going to be definitely a rescue to get the investors out of that one because I think Elon, by his own admission, would say he overpaid for that one. Uh, it reminds me a lot of Warren Buffett. Warren Buffett once said, among the many brilliant things he said, that buying companies with stock it seemed like a great idea until they bought Dexter Shoe. And I forgot what they paid for Dexter Shoe. It was a billion something, whatever, with Berkshire Hathaway stock. And he later concluded the company was effectively worthless. And so he'd a whole lot rather have just written him a check than to have burned that stock doing that because, it'd have been way better off. So I think, though, that, will the insiders get rich on the IPO pop? No question.
Sure.
Um, will these retail investors who've got $100 billion chasing what I'm going to say is probably 35, maybe $40 billion of available stock? I mean, they're just going to end up bidding up the price 3x, and the people who bought it at the IPO price, the insiders and the institutionals are just going to love that.
Oh yeah.
And so anyway, and there's a long history, especially of tech IPOs going out, having a big pop, going south. Not just them. I mean, I saw that in cannabis world too.
Yeah.
Cannabis stocks went out, and they were all in the Canadian exchanges, but they went through the roof. They used that currency of their stock to go buy all these other cannabis companies that many of which were worthless, and in the end, burned cash trying to unload these horrible acquisitions. So,
Right.
and there was no cash available to them. We talked about that in the other podcast, but they're
Right.
just
We did.
getting cash, and that's changing. And in fact, TrueLeave has registered to go public on the U.S. exchanges, and they can do that because they're medical now. Well,
Right.
medical's legal, right? June 29,
Right.
we find out if recreational is going to be considered legal, but they're uniquely
Ooh.
positioned because most of their business in Florida, which is technically legal or medical.
Yeah.
So anyway, back to SpaceX. You have some charts on some of these other IPOs that are relatively recent, and when you and I
Yep.
went through them, kind of noticed that same trend that my theories seem to be holding in most of those cases.
Yeah, we'll come back to the relative rotation graph in a bit, but let's see, CoreWeave, which this is like cloud infrastructure, and IPO back, what does it say? It's April 25th of last year. Massive pop out of the gate. Then it's pretty much traded down. I put this in here. It looks like you've got supply, people, or excuse me, demand. People are willing to buy around this, $65 kind of price
Yeah.
area.
In other words,
Every
that's what people think is a fair valuation.
Yeah, yeah. So
Yeah.
it's like, once it goes below that, you've got people that are buying. So there's definitely support at this level, but it's just, from a very simple trend line perspective, like, lower highs. I mean, you could kind of have a wedge shape here if you want to get into some of the more historical technical analysis, kind of, or a triangle, excuse me, not a wedge. But anyway, I mean, you can see you got lower highs, and it's
Yeah.
just, even though you got good support about 65, it just, the demand is not there. It's, as we look at RSI, I mean, it did initially kind of, I mean, it just traded off bad, went down to, below, in this case, like below, bear market support. Right now it seems to be staying close to bull market support on the pullbacks, but I mean, we'll see if something, comes out of it later. I mean, this is, I guess, AI adjacent, but it's not benefited from a lot of the other pick and shovel kind of AI things that have gone nuts
Right.
lately. Even though we see, if we look, we were talking about this yesterday. If you look at the momentum numbers, a lot of the things that have been, just ripping for the last 6, 8 months, and are, if you look at it on a 6 month basis, they're in the lead. But if you look at them on like the last quarter or the last month, they're not. So for the most part, they're not. So it does seem like, potentially we're at a point where a lot of this tech, AI pick and shovel stuff is beginning to peak and slow down, and there's other stuff that's speeding up. But we can get into that, in depth in another discussion. But you guys, so this is CoreWeave. The next one we have here, Circle Internet Group, and these are the guys that issue the USDC stablecoin. So stablecoins are really key when it comes to actually doing any kind of transactions on the blockchain. I mean, a stable coin is something that is pegged to, I mean, in this case, the US dollar. It could be any other currency, but it doesn't have the volatility of like Bitcoin or Ethereum, which is tremendously volatile. And also just transaction fees on that stuff is very expensive. So, but you can see here, big pop, and it's traded down. And, right now price is below all three of the moving averages that I look at. Down here, RSI came close to bear market support. And, even back here in these other, declines, it went way below it. But it just, just nothing amazing there,
Yeah.
you
Well,
know.
yeah. And well, let's go look at the rest of them.
Sure, CLAR is, I mean, if anything, this is even uglier. This is just pretty much down at a 45-degree angle.
That's pretty much typical IPO valuations and aftermarket
Right.
metrics I would expect. Yeah.
Right. And these guys are like global, buy now, pay later, operation.
Yeah.
And I mean, this is just, you got like so deep on this decline below bear market, support. And while price is pretty flat here and you're above, I guess, 2 out of 3 moving averages, it's still not great. Though you do see RSI, you've got higher lows and whatnot. So RSI looks better than price does. Maybe it's, going to turn around, but I'd look for a bit more confirmation before I, try to do anything with that.
Right.
So although RSI makes me think that it's worth watching, potentially if you like that space. These guys are, I believe this is a digital bank based out of San Francisco. It's not quite as ugly as the prior one, but still
Still
not
pretty ugly.
pretty.
Mm-hmm.
June 12th of last year, opened at 43, and where are we? Closed today at 1725. I mean, just RSI has been either going below or right at that bear market support. So there's just, again, there's nothing really pretty here. Um,
Yeah.
it's you know I don't
I
know.
think they were pretty much all. I mean, this was the one where it looked like it was kind of finding support. I think there was another one that was sort of finding a support level. But again, if I look at that day one IPO price versus where it is today, or any day almost following the
Yeah,
IPO, I do think there's one thing that will be different here in that the retail allocation.
yeah,
Um, typically the hedge funds, they want to pump and dump, right? So
yeah.
they want to buy this inside the allocation and then go flip it to the retail investor with a big gift,
Right.
a big lift, and which is a gift to them. But
Absolutely.
their typical allocation for retail is maybe 5 or 10%, right? In most
Yeah.
IPOs, this one is closer to 30. So there's going to be a lot more retail investors in the mix, and I think that all that's going to do is accelerate the opportunity for the insiders, the hedge funds, et cetera, to immediately flip it to an eager retail investor.
Right.
Um, and they are marketing this through a bunch of IBs, and they are pushing it into not just institutionals but also high net worth individuals, et cetera.
Yeah.
Um, but I wonder how many of those people are really looking at structurally how this is set up, because 30%, I mean, if somebody called me and said, I'm going to get you an allocation on this IPO, I'd take it, because I know that day one, as long as I can sell it, there's no lockup. I'd probably take it because the odds are pretty good it's going to go up that first day.
Yeah.
Um, if I can't sell it after the first day, though, I don't want anything to do with it because it's going to look like this. Um,
Yeah. It's I would be interested in buying it like after, this bid is over. There's going to be a point at
yeah,
which it's attractive, even if your valuation numbers don't make any sense. I mean, it's more kind of a vote in favor of Elon's abilities to make things happen. So let's flip through the rest of them while I've got this up. I mean, these guys, they're busy. They have a piece of design software. I believe they tried to
yeah.
buy Adobe at one point. But again, I mean, big, not immediately at the open, but very soon thereafter, you had the big run up, and then since then, it's just been down.
And that one's an AI play as well, I think, right? Because it's using AI to generate the images and graphics. Pretty sure that's an AI play.
Oh, okay. I wasn't aware of
Yeah,
that. You're probably right. These guys are cybersecurity, and while not quite as ugly as some of the other charts, I mean, you do, you know, popped, came down, and fairly volatile, but it's had a a real serious downtrend here recently. It's come out of it. Um, and we'll see whether it's able to hold this. I mean, if price starts going back up and you see RSI, bounce off the bull market support, then there's a reasonable chance that we're into a motive move up. In Elliott wave terms, this could be like a one off the bottom, the two retracement, then you'd be looking for a three that's going to be significantly higher if that happens. But of course, it's too early to say. So you would want confirmation before you would get into it. I definitely want to see it, close above at least two of the three moving averages, and I'd want to see RSI turn around. But not as bad as some of the others, but still nothing to write home about.
yeah,
Next is Reddit. The and we're looking at just to get everything on there. We're looking at 3-day candles instead of 1-day candles here, just to get it fit on a single page, so we don't have to scroll. Um, it's been this has been a bit more successful than a lot of the others. I will say that I personally hate Reddit, but and 3 of the professional organizations that I'm part of have their forums on Reddit for reasons that completely escape me. But you had
Well, I
really
think it
good,
helps too that Reddit's got like a 90% gross margin.
yeah,
And I mean, high liquidity, they make money. It's a really simple business model. And, but for the fact that they have the name recognition, and so therefore everybody's going there,
yeah,
50 other players could create the same thing, except that creating the same thing isn't the same as having the audience, right? It's
right.
like,
Well, it's like Facebook, right?
yeah, it's like the early days of, Facebook versus Google Plus,
Yeah,
right?
I mean,
Um, where like nobody was there.
right. Facebook. I mean, like MeWe is a much better platform, but you just don't have as many people there. You don't have all the
Right.
toxic clickbait crap that you do on Facebook, but everybody's on Facebook,
Well,
and
and there's an interesting dynamic when you talk about those social media sites, right? Which
right.
is the old utility of the fax machine conversation, which goes back to something called Metcalfe's law. And this is a technology thing, but Bob Metcalfe is the guy who invented Ethernet.
Yeah,
And Metcalfe's law was that the value of a network is equal to the number of nodes in the network squared.
yeah. Okay,
And
I
the
remember
logic was
this.
pretty straightforward because, all right, if and fax machine was always used as the example to illustrate this. If I have a fax machine and I'm the only person on the planet that has a fax machine, as cool as it might be, it's worthless. Can't do
Yeah,
anything with it, right?
right,
If you now have a fax machine, great. You and I just got a lot of value out of it. But
right.
if we get a third person to get a fax machine, you got value, I got value, they got value, hence the square, right? And
Yeah,
so
yeah,
as fax machines increased exponentially, right, the value of a fax machine became, I mean, it became to the point where, it was a utility effectively. Um, and, and still in use today because HIPAA somehow presumes that a fax machine is safer than any other digital mechanism, which cracks me up because it's really analog. But
right.
the the same is true there, right? Whether it's Facebook or whether it's Reddit or whoever it might be. If you don't have a large audience, then the platform is not worth anything. Reddit
Right.
has that audience because they were the first one there with the kind of the business model that they have, and they
Yeah.
didn't screw it up. So that one makes sense to me because there's value there. I mean, 90% margins and growth and everything else. That one has value.
Yeah. Yeah. Yeah.
In
Yeah.
other words, that's what a value investor would love to buy into as an IPO.
Yeah. This one, I think this one potentially has legs. I mean, you're in. It's kind of choppy, but you're probably in like a wave one of another motive wave up, and it's still fairly early days. Like this was a solid 5-wave move up right here. If you can see what I'm doing on my with my cursor.
Yeah,
Um,
the only thing that would worry me about somebody like Reddit is that it's subject to the vagaries of you know uh, younger populations' whims. If
yeah,
somebody decides that they're racist or something, and everybody says, "Well, we're leaving Reddit because of that," and they go somewhere else. Now,
yeah,
interestingly, you look at X, right? And X did not end up losing a huge chunk of their audience, despite the fact that everybody did everything they could to, bring Twitter down after Elon bought it, um,
right.
including prohibiting advertisers and, doing crazy stuff like that. But the simple reality is that once that's embedded into the culture, it's really, really hard to unwind it. I
Yeah.
always marveled at the people in the media who complained about, Twitter after Elon bought it on Twitter.
Yeah,
I'm like, I don't think you get the point here. And then
kind
they
of
went and
ironic.
created Blue Sky, and that has basically been, Blue Sky and Truth Social both have pretty much just been a debacle. So,
Yeah.
which demonstrates a whole other thing, right? You can't have an audience of just one side because there's nobody to argue with. They got to have people on the other side to argue with. So anyway, I think Reddit is, Reddit's a fundamentally sound thing, at least at the present time.
Yeah.
Um, so, and then the next one was ARM, right? And ARM has been around, ARM chips have been around a long time.
Yeah, this
Um,
chip manufacturer. I mean,
but
it's
you
you
see what
know,
happened when the AI thing started taking off because
yeah,
they're
it's
AI adjacent, as you said.
right. So it's like February 6th of this year. It just kind of boom went nuts. This is let's see. This is a weekly chart. So
It's interesting to
big big.
track that versus the Mag 7, you know? How much does it
Um,
mirror the Mag 7?
yeah. Let's see. Let's
You can do it for the next one. It's just, it'd be an interesting one. So then
what's
your rotational graph,
yeah. I mean, and we're looking at what we're looking at here is this is 2 week kind of each dot is sort of where it was for a given 2 week period, and it goes back 20 weeks. Most of these have been in this lagging quadrant, meaning that they are underperforming the S&P 500. I've got SPY here is the reference index. So the majority of them are underperforming on both a relative strength and on a momentum basis. Relative strength is how one security is doing relative to another, and you basically take one price series and one price and divide it by whatever your reference is, and then you graph it. If the line is going up, your numerator is doing better than what your denominator is. It doesn't necessarily mean that the price is going up. It could just be declining more slowly than the index. So you have to be aware of that. And momentum is basically rate of change. So most of these guys have been solidly underperforming for the last 20 weeks. A couple of exceptions here: ARM and Circle Internet Group, and these are the stablecoin guys, and ARM is the chip manufacturer. So, um, so just not an amazing story, If
right?
what did you want to see? You want to see ARM compared to
Mag 7 would be interesting, wouldn't it?
what's the ETF that tracks Mag 7?
Oh, I wish I knew. I can look it up. Let me try.
Okay, do that. I'm
Um,
going to set this up real quick while we're on.
yeah, there's
Um,
got to be one. So um, I'm thinking it's probably, let's see, there's Round Hill has one called Mags. That's
yeah,
probably as
okay.
good a,
So we just put
that's probably
ARM.
as good of,
All right, let me just put something else in here just to make it. I'll delete it in a minute. But okay, mags. Let's go in here and change the mags. Change this puppy. So is mags with our index? Where the hell are you? Okay, look at this. All right, so ARM has, you know, where are we still? This is daily. Okay, so um, on a daily basis, this is done tremendously well on both, relative strength and momentum perspective. But it's as tends to happen, you'll see these lines kind of rotate in a clockwise pattern. So it kind of hit its strongest period, and now momentum is beginning to bleed off. So it's momentum's just a little bit less than what mags is at the moment. And we'll see how long it takes it to get all the way to the lagging quadrant, if it ever does. If it doesn't head fake us and turn right back up.
yeah,
But that's your comparison. So versus mags, I mean, it's been way better. And mags, we talked about this yesterday too. Mags is not in the top 10 from a momentum perspective at the 6 month level, at the quarter, at the monthly level. It's all just kind of dragging, even though a couple of years ago they were just the darling and nobody else was doing anything.
yeah. Um, well, and I want to throw another data point in here too, something I went and did a little research on. But there's, if you go back in time and you look at IPOs, like I don't know, take the research period that I could find pretty easily was 1980 to 1987. Uh, First of all, a median IPO was significantly overvalued at the offering
Okay.
price relative to valuations based on industry peers and those kinds of things. Um, Anywhere from 14 to 50%, depending on what's there. But a far more damning thing, really, is um, overvalued IPOs typically have lower profitability, higher accruals, and higher analyst growth forecasts than the undervalued IPOs. Duh. Um, the projected high growth of overvalued IPOs fails to materialize. I think the growth will happen here in terms of revenue, but
Right.
I'm not convinced that the growth is going to happen here in terms of the bottom line, right? That's the real question, especially when you consider, I mean, you look at, the historical example has always been Amazon. Even when Amazon had positive gross margins, they still weren't making money because they were investing so much in growth
Right.
that it took them a long time to get to the point
Right.
where they were making that. Um, so I think then, it's a better than 50% chance that any IPO is overvalued.
Yeah.
That's interestingly statistically the trace. And then you got to go look at the lockups. And so I think what's really here is that when you get to their first earnings, if they miss on that earnings call, and that earnings is going to be a loss, not an earnings, right? But if they lose more than is expected in that earnings, I think you'll see that stock drop considerably. So to me, the play
Right.
is trade on the suckers by either doing a short on this right out of the gate. The timing of that's interesting, right? Like, what's the period of time you do the short on that? And this is now we're getting into your area of expertise, not mine, because as a value guy, I'm not normally doing shorts. I'm normally looking for something I can buy and hold and ride that puppy all the way to the moon. But
Right.
if I'm going and looking at that, to me this is great short opportunity. I wonder what the short interest margin is. I don't know if that's published yet.
Um,
I don't know if it's
yeah,
published
that's
yet because the stock's not available, right? But
right. It's you can't borrow it right now because it's not really out yet.
yeah,
I'm sure they're gonna have options on this. So the next time we talk, like, we definitely need to go look at what the options are on this. Let me take a quick look. I'm not going to what is it? SP, what is it? SPAY?
SPACX,
SPAC
SPACX,
SPACX. Okay, great.
which is pretty funny when you look at the SPACs.
Yeah.
Talk about another insanely overvalued instrument. It's got to be the greatest play on unsophisticated retail investors the world has ever seen. We're going to raise money to go buy another company, and we don't even know what company it's going to be yet. Just give us the money. That one just always boggled my mind. But anyway, special purpose
I need to
acquisition
do one of
clips.
those deals. I have plenty of things I could do with a SPAC.
Yeah,
Okay, there's no options available yet, so
yeah, I
we
wouldn't
can't
think
look at
so.
that.
Um, but as soon as it comes out, I expect there will be some. So, I mean, from my perspective, again, this is just me, the value guy, but me, the value guy, thinking about it as I wouldn't want to own this stock at the IPO,
Right.
except to the extent that I could either short it, and I
Yeah.
would try to set my short window to be somewhere. I don't know. I think immediately following that first earnings call,
Yeah.
um, and being a value guy and therefore being generally conservative and terrified of losing my money, I would probably do a collar on this where I would buy some puts and sell some calls, right?
Yeah, exactly.
And I would definitely buy some puts and then get those calls in there for downside protection, and upside calls. But I just don't think it's going to happen. I mean, you looked at those charts. I just think the only thing that overcomes it falls into your world. It's momentum based, right? Everybody
Yeah.
wants to own SpaceX because it's Elon Musk, because it's the biggest IPO in history, because it's catching rockets coming back from space.
But
Um,
because it's going to eventually be pulled into the queues and the other various other indices, or they're going to want to
yeah,
pull this in, which is institutional demand. And if it goes in the index, the people running the ETFs and the mutual funds that track these things have to buy it. I mean, that's their job. They have to buy it.
and I saw something the other day about this that the QQQ is very likely. I think it's only like 22 days until it gets into the QQQ or something like that, because they changed their rules recently. It's going to get in there really fast. which means
Yeah,
all institutions with
yeah,
funds are going to have to buy it, right? Which is why
right.
I would set my strike price and my strike date somewhere further in the future, because I think, once it hits the QQQ, all these institutions are going to have to buy it, and
Yep.
they're going to end up bidding up the price. So, maybe what you do is you do a short on day 21, and you do a call on day 22. I don't know. I don't
Yeah.
know. Really do that.
I mean, that's yeah.
Yeah.
I mean, out of the gate, there's probably going to be a short play, or put strategy is going to make you money. But I mean, get your call, with the strike price after the projected time at which it gets pulled into the various indices, because it's
Yes.
obviously going to have to go up
Exactly.
then. I mean, the options market makers know this, so these are going to be expensive puts and calls. I mean, you're not going to be able to sneak one in, so to speak, but they will definitely price these expectations in. So I would expect options on this to be pretty expensive once they're actually available.
Yeah.
Um, when we talk next week, we should definitely take a look at that, and see if reality is caught up to our expectations, or if we were, just a couple of monkeys.
Oh, this is going to be a fun one. Yeah. I can't wait to
Yeah.
see the chart on that and see if we got it right or we got it wrong, or I got it right or I got it wrong. And I mean, you haven't really thrown out an opinion per se, because
Well, um, I think we're going to see the same kind of thing that we have seen in a lot of these other IPOs. I think we're going to see a spike, and then I think we're going to see it trade off, at
yeah.
least to the point in which it gets pulled into, the Qs or one of the other indices. I did read something recently that I think the rules, for NASDAQ, they've relaxed those, so it's going to get pulled in earlier than it otherwise would. But they have not relaxed the rules around pulling it into the S&P 500. So
Mm.
um, I think there's certain profitability requirements. I don't remember the details, but it's not going to immediately go in the S&P 500, whereas it's going to almost immediately go into the Qs.
Yeah. And I looked this up, by the way. It looks like it's going to be around the 3rd of July.
Okay, that's
Um,
very quick.
15 days trading, 15 trading days post IPO. And the reason is there's a revised NASDAQ methodology effective May 1 of this year that
Yeah,
allows any newly listed ranked among the top 40 by market cap. Well, I'm pretty sure this is going to be in the top one,
yeah.
um, to enter the NASDAQ 100 after just 15 days. And the old free float requirement is eliminated. So SpaceX probably hits the index maybe July 6th or so. I don't know, somewhere around the 4th of July. It's kind of what I would get
Okay.
on.
Well,
And apparently that rule was written for SpaceX.
certainly
Big
looks like
surprise.
it, doesn't it?
Big surprise. Well, I mean, I'm sure that all the guys at the Nasdaq are thinking, imagine the value we're going to get by putting this into QQQ.
Right.
I mean, that's going to be amazing when it goes into the Qs. And for people who are not familiar with the Qs, you want to explain that to our audience real
Uh,
fast?
yeah, the Qs it's an ETF, or an exchange traded fund that tracks the Nasdaq, which is it's very tech heavy. So there's a lot of many technology companies, much more so than the S&P 500, which is a bit more. I mean, while tech is a big part of that too, it's a lot more diversified. So it's more of a concentrated technology play. There's some other stuff in there, but tech is your predominant
Well, and
component.
here's another interesting aspect of that, right? Which is the relative to its overall market cap,
Yeah,
the float is pretty small.
yeah,
Um, and so I don't know what the market cap is right now. Is it a trillion or something? I've forgotten what the number is in terms of the valuation that they're going out at. But the Morningstar, it's more than that. It's like 1.5 trillion or something. I think
yeah.
Morningstar has them valued at like 780 billion. Again, the value investor view of the world, and that's about half their IPO target ish, I think. So what's interesting is you're going to get this big pop in the QQQ in the Qs, because you've got this massive market cap that comes in,
Right.
but you're not going to be able to do a lot of trading against it because there's a whole lot of float, which to me strikes me as you're going to have a lot of volatility now in the Qs that you didn't have before. Not that it wasn't already volatile, but I mean, this could increase the volatility, I think, dramatically. It would be fun to watch. Maybe the thing we ought to be talking about in a week or two is, maybe not a week or two, but sometime in July or August, late July or August, is what happened to the beta of the Qs.
Yeah.
Because it strikes me that it's going to increase the volatility of the Qs, and that's going to begin to really cause some interesting problems. It'll be the tail that wags the dog in terms of float
Right.
For the Qs. So,
well, an increase in volatility is going to, make options prices certainly go up, because that's one of the inputs to your Black-Scholes option pricing model. So more volatility, means greater prices on both your calls and your puts and whatnot.
well, and
So
think about this too, right? As soon as it gets into the Qs, every institutional that's tracking that, mutual funds, ETFs, probably hedge funds that have it, as part of their target strategy or whatever, all are going to have to buy it.
yeah,
They got to put it in their portfolio, but the float is so small, and that's
right,
going to happen well before their first earnings.
right,
So, all the lockup people are still going to be locked up.
yeah,
So
yeah.
there's going to be
There's
very
not,
little float, and there'll be a lot of demand. So I would say a good time to buy it if you're looking for the second pop, somewhere around July 1. So,
yeah,
again, I'm pushing my put date further and further out, but I think that put date is either right before or right after that first earnings call, probably right after.
yeah, yeah. Yeah, as you because of this early introduction into the Nasdaq, it's you know I think you're right. I'm kind of revising my opinion a little bit. We'll probably see a dip, once trading starts, but it won't be the cut in half kind of dip, because you don't have very much time until it has to go into, all these ETFs and whatnot, and it has to be bought by institutions. And limited float, to your point, a lot of demand is going to drive the price higher. But yeah, once that pressure is gone, I would expect it to trade off. So yeah, puts with an expiration shortly after first earnings call may make some sense.
So do you see, or maybe you spread out some puts, right? You put some chips on all those numbers on the roulette board here. Um, you know,
You could.
Based on what those events are. I mean, it's another way to do it, especially if you're buying calls to protect the upside. But
Yeah.
yeah, I'd be tempted to spread it out and say, okay, I think that this is going to cause the price to get depressed. I think this is going to cause the price to go up, and those are
Right.
structural things. I mean, I don't think there's anything they can. I mean, first of all, they don't even have their first earnings call probably until what? When would their first earnings call be? I don't even know. But
I don't
um,
know. I
whenever
mean,
their first, their next quarterly earnings comes out and they file their Q, that's an event, right? So it's either going up
yeah.
or down that date. Um,
I mean,
and then
we're in June, so I can't imagine that they would do a queue for, a half, 3 weeks of June or whatever. I
yeah,
mean, I can't imagine they would do that. So your first earnings call is probably in October.
yeah, but I mean they're going public. Let's see,
Unless they're
so they're
not.
going public before the end of Q2.
Right.
So they're going to have to put out a Q for June.
Well, yeah, it's just so limited though. I wouldn't expect that there's so little time on that. I don't expect a big decline based on 3 weeks worth of data.
Yeah, but I
I
mean,
don't, I think most
it's
people
really
are
not
going to,
3 weeks of data, right? It's a quarter of data. It's just that they were only public for 3 weeks of the quarter, and
right.
then also when the insiders start to unlock.
I don't know
Isn't
that.
that? I think that's I think about 20% of them or something unlock after that first earnings release. So
Okay.
this is boy, the more we talk about it, the more I'm convincing myself it's just going to be really volatile. There's going to be huge demand spikes, and then there's going to be huge like sell-offs. So
Yeah.
that's flippant and off the cuff, but boy, it sure looks like that's going to be the case. Um, Something to look at in a little more detail. But I do think that you're going to see some volatility here. I wish there was a VIX for a stock. uh,
Well,
Buy the VIX on SpaceX.
we can we can once we got some history, we can calculate it and we can compare it to the Qs and we can compare it to VIX itself. I mean, it's that's not terribly hard. I mean, we'll do that. Maybe, I mean, let's give it a quarter. In the fall. Let's revisit this, and I'll let the computer calculate that, the volatility for us. We'll put it up on the screen and show everybody what's
Yeah.
happening. And
I
we
mean, I
can,
would say for anybody who is seriously thinking about this stock, I would get the prospectus and read it. Now, I've never read a prospectus that I didn't come away thinking, why the hell would I buy this stock? I think that, when they get through all the disclosures and everything, and when you go through all of them on this one, they're going to be really, truly terrifying. But I don't think you're dealing with a rational market, right? You're going to be dealing with momentum trades and things like that. But I think that more importantly, all these dates and lockups and all have to be in the prospectus. And so if you kind of put together a timeline, then you probably come up with a theory of when should I put and when should I call, um, or maybe you just buy and hold, but I wouldn't recommend it.
yeah, not yet, not yet. And as to rationality, I think my view. I mean, until the robots completely replace us, as long as you actually have monkeys making decisions, we are driven by emotions way more than we are driven by reason. So that's why, I don't know. When I first learned about the efficient market hypothesis, I kind of, chuckled to myself, and not directly in the face of my graduate school instructor, but, the underlying assumption that all investors are rational is faulty if we posit that all investors are human. So,
If you've ever met investors, then you would immediately know that they are not all rational.
if you ever met humans, you would know that they are not
Right.
rational. So,
But the interesting thing that cuts against that is some of the wealthiest, most successful people I've ever met are the least like you and me that I could possibly imagine. They are not analytical. They are not.
right.
I mean, their analytics is 8 seconds of thought. It seems like a good idea. I'm in. And they tend to be good at reading people, and I think
Yeah.
that's why they're good at making money that way. Because one, if they're in a situation where they're trying to sell their company or product or whatever, they're able to read the other side and figure out, how do I make it so this person wants to buy it. They're salesmen at heart. And
Right.
two, they intuitively know that other people want to buy this. um, and but they tend not to get clogged up in the details of what's the margin or any of that kind of stuff. And so, now there's those same people. I would also tell you, I have seen them, because I'm a turnaround guy, go spectacularly broke because they weren't paying attention to the details. So they made a fortune and lost it.
Yeah.
I've seen that happen a number of times. But I would also tell you that risk profile has a lot to do with it. I can't tell you the number of entrepreneurs I've met who are very wealthy, and when I sat down and started talking to them, their story started with, "Well, it all began when I lost my job." And at that point, right, they had nothing to lose. So, like,
Yeah.
hell with it. Let's go try this. Right? I got an idea. I want to go try it. What do I got to lose? Nothing.
Right.
So I'm going to go do it. And
Right.
that's when they make it. Um, there's also an awful lot of work that goes into the overnight success, that I think a lot of people miss, right? Like, you look at Sarah Blakely and
Yeah.
Spanx. I mean, she didn't just like cut the feet off a pair of pantyhose and become a billionaire. I mean, she busted her ass going around selling this product and this idea to people
Yeah.
that nobody had ever heard of, and was running it out of her townhouse, I think, in Atlanta or something. So there's a lot of hustle in there too.
Yeah, my dad always said that the definition of or an overnight success is somebody that's been busting his ass for 20 years and then finally gets noticed.
That's right.
So,
That's right.
that's one of his.
In the music world, Bonnie Raitt was a great example of that. She was the overnight success, except she'd been touring for 30 some odd years.
Yeah, there you go. There you
And she
go.
finally had
So
one big hit.
yeah,
Um,
there's
well,
truth to that.
I'm not sure exactly where to tell people to go with this, but I as one of my finance professors used to say, I'll make a prediction on interest rates for you. Interest rates will vary. Um, and so, I think the same thing is true here, right? The stock price is going to vary, and I think it's going to be one of the most knife-edged volatile stocks we've ever seen, just based on all these structural things that are built in, and the fact that
Right.
there's also an irrational exuberance to want to own the stock. Um,
Yeah. Yeah.
you
I
know,
mean,
so,
retail FOMO frothiness is huge in this case.
oh
And
yeah,
as you brought up, I mean, there's a lot of structural reasons why the institutions are going to have to buy it at a certain point.
they're absolutely
So
going to have to. Yeah.
I mean, this is, we have this back and forth all the time. I mean, we have both created financial statements. I've written sections of the Form 10 and, K's and Q's and that pertain to my little piece of the world. And, I don't know, people that have not done that, that have some of the same letters after their names that I do. I think they give way too much credence to financials and have way too much faith. And I don't know. I feel like I'll stand by my statement that until the robots replace us, you gotta deal with people's emotions more than you deal with them making rational, reasonable decisions about where to put their money. You know.
And it was interesting too. I credit Charles Payne on Fox Business News about this one. The other day, he had a guest on. He was talking about the fact that all these people are now using AI to get like a pre-market summary sort of thing, right?
Right.
So hey, I used to joke all the time that, well, yeah, the internet's not remarkable except that it gives you access to the sum total of human knowledge.
Right.
Um, then the fundamental problem was finding it, the needle in the haystack, and that was really the problem that Google was trying to solve, and largely did solve.
Right.
But then the problem became, even if I could show you only the stuff that was relevant to the decision you were trying to make, the amount of time and energy it would take you to consume all that and
Yes.
digest it and analyze it was still beyond your capability. And that's where I think AI comes in, right? Is it has the ability to read all that, consume it all, and then get to conclusions pretty quickly. So Charles Payne's point was, okay, we got tens of thousands of people now are waking up in the morning and getting this market summary or market prediction or whatever market forecast using an AI tool. Except that, yeah, how many of them are they using? There's 6, 8, maybe AI tools that people probably are using to do this kind of thing. And what's the volume or what's the population of data they're looking at? Well, it's market data. In other words, they're all looking at the same stuff.
Right.
So what it really means is you've replaced millions of individual decision makers and perspectives and experience and views and biases and all that with 6 or 8 players who have very little experience, inherent biases, but are all looking at the same data, right? They're all looking
Right.
at the same ocean of data. And he's like, so how much difference is there really going to be between your Claude forecast this morning and my Claude forecast this morning? Probably not a lot. It might be some based on contextualization I've set up in the tool about these are things you should know about me, blah blah. Yeah, it'll be different, but it will present it differently, maybe. But I'm not
Yeah.
sure it's going to come to wildly different conclusions. And so his point was kind of, hey, everybody's starting to think the like as opposed to divergently. They're converging. So I thought it was a really interesting observation. Short answer is none of us really know.
Yeah.
But I do think that there's a lot of truth in that. And I even saw an article the other day about um, trying to determine when you get a document from somebody how much of it's AI written or versus of somebody actually writing it. And there are giveaways for AI that you can go and find. But
Right.
the short answer is: are people actually thinking originally anymore? And I would say that less and less so. Um,
Yeah.
it's kind of like a form of very advanced plagiarism.
Yes, it is. And I really worry about the kids. I mean, younger folks that that don't have to stretch their brain to produce a lot of the things that we had to produce before the internet. And I know
Yeah.
we are old farts here, but get off my lawn.
Well, and
Um,
I think the real test is it correct, right?
yeah. Well,
Um,
it's not. I mean, or it does make mistakes. And, as the disclaimers
Yeah.
always say, you gotta like double check. You can't accept it at face value.
But how do you do that? I mean,
Well,
if
I
you
mean,
ask Claude to go look at all the market data for the last 3 weeks and then tell you what it thinks, how do you don't have the capacity to go look at the last 3 weeks of market data.
no,
I
but
mean,
I'll have it pull like for this podcast, I had it go pull the give me the last couple of years worth of IPOs, and I want to go look at the charts. And one of the comments on one of them, I don't remember which one it was, but it said, yeah, this is good because it's doubled from its IPO price. But what Claude didn't
mm,
mention was, I can't remember which one this was now, but it spiked up, over $100 where the price is now. It came way down, and then it traded back to, started at 40, and it's, currently around 90 something, but its height
right.
on the speculative push was about 180, $190. So let me pull that up. Let me get that again, just so we can look at that. So Claude's, looking at two data points. Um, it's not looking at every single data point along there. So it's kind of missing the point. Is it
Mm,
this one? It wasn't. No, it's not this guy. It's not Claire. It may have been these guys. So they started at about, where did they open? Open 60. No, it's not them. Is it coming? It's not these guys. No, it's not them. I thought it was Circle. Maybe this is it. It says he opened $69. Um, at a high of 238. That's not the one. Is it? Maybe it's this guy. First one. Yeah, so it's him. So open at $42, traded up to a high of 187, and is now down to $87. So you've lost $100, from the height. And
right.
and Claude was saying, yeah, this is a great one because it's doubled in price. I'm like, well, if you got it if you got it right at the open, then yeah, you're right. But it was a hell of a painful way to get there. Um, and if you bought, up here, you're not happy with yourself. So
Right.
anyway, that's just, there's so many people out there pushing trading systems that are based on AI. And, I mean, I've built learning models and things. And it's like, if you don't go look at the charts, you're missing context.
Hmm.
And it can absolutely blow up in your face if you just blindly accept the output of the algorithm and then go put real money behind it. I mean,
Right.
because um, as a trained technical analyst, I can look at a chart and pick out all kinds of points quickly. But to be able to write code, even with the help of Claude, that just has a series of if then statements, effectively, that, well, if this occurs, then you need to look out for that. I mean, it's ginormous. I'm sure there's people out there doing it, but I don't know. I mean, at a certain point, I think that the human eye, from somebody who's trained, can pick information out quickly. You just need to be able to use the machine to kind of narrow down the pool to what makes the most sense. And that's what I try to do with those momentum scans that I shared with you yesterday. And we'll,
Well, that spreadsheet that you and I looked at the other day, I think that should be one of these podcasts. It is it's fascinating to kind of look at how it shifts and who ends up bubbling to the top. And you're maybe not boiling an ocean of data, but a decent sized lake of data
yeah,
to get to kind of like who matters and pay attention to them.
yeah, yeah, we'll do that. We'll do that.
Okay, I think it's a great
So
idea.
everybody who's, watching, you got that to look forward to as we geek
There
out
you go.
on more numbers and market stuff, and should be fun.
Well, and I think the lesson from today is you should either you should buy Tesla or you should sell Tesla or you should buy SpaceX or you should sell SpaceX. But we really don't know the answer to any of those. I but I mean, I think that, and it might not be or, it might be and. You know,
Yeah,
maybe you should, maybe you should short SpaceX and then, you know, buy SpaceX. By the way, I was incorrect. The ticker symbol is SPCX, I think.
I'm not sure.
So I'm
Hold
pretty
on.
sure almost any market tool today, if you put in space SPACX, it's going to return SpaceX anyway. But just so I don't mislead people by my error.
It still tells me it has no options.
Yeah, I don't think they're going to. I mean, June 12th is tomorrow, so I guess tomorrow's the day it's going, right?
Yeah,
Um,
okay.
but yeah, I think it's going to be really, really interesting to see what happens.
Nothing
And
yet.
this is going to be a fun one to prove or disprove theories. But and I think what I'll try to do ahead of our next call is lay out that timeline, right? Go through the
Okay.
perspectives, look at that timeline, and then try to say, okay, here's my, look at it like a mortgage portfolio. I'm going to try and do a prediction of what the runoff's going to be, and when it's going to be high and when it's going to be low. But now, how much higher, how much lower, I am not qualified to do that. But I do think I could say, that it will be higher or it will be lower. But
I I think I
in
need
those
more than
time
one
frames,
bar to make those decisions.
yeah.
But we'll see what happens tomorrow.
Well, I mean, isn't that what momentum's all about, right? Just that
Yeah,
it's moving in that direction, right?
yeah.
How far it's going in that direction, yeah, less relevant. Yeah.
Well, there are tools to do that when you've got, excuse me, history to look at, and you can see some, price structure and whatnot. So there are ways to go about it. Um, it's not hard science like, you know, putting, two hydrogens and an oxygen together to make water, but it's, again, it falls closer to psychology because that's what we're dealing with. And there
Yes.
are, recurring patterns and monkey behavior. So
Oh,
that's,
and then some. Yeah.
oh yeah. So I
Um,
mean that's ultimately what we're dealing with. We have a lot of numbers attached to this, which are cool. I mean, we like numbers, but at the end of the day, it's still fear and greed that are driving everything. And you have monkeys that are programming the robots at the moment. So the robots are not completely independent yet. And it's not something that exists in a vacuum. And I just think a lot of people, particularly the ones out there trying to market stuff on the internet of like trading systems and whatnot,
mhm.
convince their audience that it is. And, you don't have to think, buy my $5,000, never lost trading system. And that's
Well, anybody who
yes.
ultimately buys into that should probably go look at long-term capital management. Um, and the black swan is the thing that always gets you when you develop the perfect model. It's
Yeah.
the thing that you didn't model.
Yeah.
And it's the same argument I have against the IPCC and all their models of climate change.
Right.
And I always kind of put that to people this way, regardless of which side of the climate change debate, if you can call it that, is out there. I always kind of come back to the same thing. Okay, look, you're telling me that a group of scientists who don't work in the same place have all coordinated together to develop this model that attempts to quantify every one of the dependent and independent variables that influence climate here on Earth. How many variables are there versus how many variables have they modeled? Well,
Right.
the short answer is we don't really know how many variables there are. We
Right.
know how many they've modeled, but we're pretty sure they probably haven't modeled all of them. Now, let's go and take this on a much smaller, less complicated scale. Let's move to something really, really way less complicated. Like, oh, I don't know, let's say the stock market. How many variables are there that drive the price of stocks in the stock market? Well, again, I don't think we really know, but we probably
Yeah.
have a better idea than we do in climate change. And how many people have models that model even most of those, much less half of those? I would say not many, if any. Um, how many of those people are able to predict the market with absolute clarity and certainty and that they're right? And the short answer is pretty much none of them.
Yeah.
Um, and so now you're talking about something that is, at a minimum, orders of magnitude more complex when we get to the climate. which is why I never
Right.
believe anybody's model on climate, whichever way they say it's going. They don't know. And the same is true of the stock market. We can at least be kind of certain that it's going to move up or it's going to move down, assuming that long-term capital management doesn't happen and the black swan comes out of nowhere and gets us because nobody's model factored that in.
Well, I mean, it will. That'll continue to happen.
Always.
And
Yeah.
it happens way, stock prices are not a normal distribution. You got fat tails, so the black swans happen way more than, they would. Those extreme outliers occur regularly,
Right.
uh, compared to what you would expect, based on your undergraduate statistics class and what they tell you about normal distributions. We're really geeking out here. I was going to
Yeah.
say, I don't know who originally said this, but I like this quote. It's like all models are wrong and some are useful.
I like that. That's good. That's
It,
very insightful.
and
Um,
when you take a quant approach to trading, um, you're never trying. One of the big dangers is curve fitting. So explaining the noise in the data, too
yeah.
closely, instead of just focusing on the signal, so that the model looks great on the training data, but then when you
Mm-hmm.
try to apply it, in the markets, you get your ass handed to you because what you've done is you've modeled the noise and not the actual signal. So
Well,
that's one of
and
the big things that you got
like
to
the
be careful
IPC
of.
has done, IPCC has done, which is those things that don't fit the curve, you either change the data or throw it out of the model,
Yeah,
which
yeah.
I'm pretty sure neither of those is valid. But throwing it out of the model, I think happens a lot in all kinds of modeling. It's like, well, that one, there's too much noise in that. The noise to signal ratio is way too high. And so we can't rely on that. I can't predict that. It's just this random thing, and therefore it must be irrelevant. Yeah, maybe.
Well,
Um,
there's
so
statistical tests
anyway,
for
yeah, you're right.
determining
We're
the
down a geek
value.
hole.
Yeah, yeah, okay.
Yeah,
We're definitely down a geek rabbit hole.
I think we
So
got to pull up and let our audience go, and come back and try to go through this timeline on
okay,
SpaceX, which will be interesting,
that'll be
uh,
fun.
and and come up with what we're going to talk about next time.
All right, beautiful. Um, Thank you all for watching and listening to us. I hope this has been informative. I hope you've enjoyed it. Please comment. Let us know if there's something you want us to talk about that we haven't talked about yet, because as you can probably tell, we enjoy geeking out on this stuff. And like and subscribe, and we look forward to seeing you in the next one. Take care.
Fantastic.